So as I said earlier as well, annual report consists of 300 and 400 pages, but only 3 pages is important. The first one is the balance sheet page, the second one is the profit and loss account page, and the third one is the cash flow statement page. If you know these 3 pages of the annual report, you know the 90% of the annual report. So in the last video, we had focused on the balance sheet. In the easy, simple manner, we had understood how to read balance sheet. I'll attach that video over here for your reference. And in today's video, we will be focusing on how to read profit and loss account in a simple manner without any accounting jargon. I am pretty sure that if you stay tuned till the end of this video, you will be able to gonna understand the profit and loss account of any company in a simple manner. Welcome back to my channel. I am CA Latika Lala. I decode hard things in 10 minutes. So before further ado, let's get started. So let's move to the structure of profit and loss statement. First will be the revenue portion. Revenue, if you go to the notes to account and see, revenue can be from the sale of the products which the company is doing or from the sale of the services. It gives you the total revenue. After that, there will be a line items of other income. Other income are those income which is not in the nature of the business but still the company is earning. For example, if company is investing their money in any mutual fund or in any FD, they are earning interest and dividend from that investment. That comes in the other income. So the revenue, other income. Then there will be the list of expenses like cost of material consumed, employee cost, power cost, fuel cost, other cost, interest cost, other expenses. That comes the total expenses. And after deducting the revenue and expenses, it gives you the profit before tax item. After the PBT, it gives you the tax amount, and after deducting tax, it gives you the profit after tax amount. So the structure of P&L is very simple. Revenue, other income, it gives you total revenue. Expenses, list of expenses, total expenses, it gives you the profit before tax. Profit before tax minus taxes, it gives you the profit after tax. Let's move to the profit and loss account for Reliance Industry. In the profit and loss account, it clearly states that this is for the 31st March 2025. So this is for the 12 months period from 1st April 2024 to 31st March 2025. So generally the companies which are located in India, they generally follow the financial year starting from April 1st 2024 and ending on March 31st 2025. So first let's see the income portion. The first is divided into two things. The total revenue is divided into two parts. First coming from revenue from operation. Second is the other income. As I explained earlier, revenue from operations are the revenue income they have generated from selling their product and services. And other income are the income which the company is getting from not from the regular business. This is the income which they are earning from maybe keeping their FDs or investing in mutual funds. So from interest, from dividends. So these are the other income. So revenue from operations and to other income, it's the total revenue for the company. Now if you see, there are the notes to accounts number next to the amount column. This gives you the clear picture and gives you the classification from where the company is earning the revenue and what comprises of the other income portion. So for example, if you go to the notes to accounts, you can see that revenue from operation is further divided from the sale of products, sale of services and other sale of scrap. It constitutes to the revenue from operation. And if you go to the other income, you can see that interest income, dividend income, foreign exchange reserve, it constitutes to the other income portion. So notes to accounts helps you to understand the better picture what constitutes to that particular classification. The next comes in the picture is the list of expenses. The first one is the purchase of stock in trade. So what is purchase of stock in trade? This is the raw material which company buys for making the final product. This is one of the largest expenses if you can see for the industry which is in the product. But if it is in the service industry, then the employee cost will be the largest one because they will not gonna buy any raw materials. Now the next come changes in inventory part. So since we are using accrual basis of accounting, I'll be explaining this term in a simple manner. I know most of the people think this is very complicated, but I'll make sure that I'll give you such examples that you will be able to understand what is changes in inventories. So first example is that just imagine that you are able to sell the 80 products for that particular year. but you bought the raw material anticipating that you will be able to sell 100 products. You were able to sell 80 products, but you bought the raw materials for 100 products. Now there is a 20 products which you were unable to sell in this current year. Now your revenue is short of that 20 products, but your raw material expenses is up by that 20 products. So to show the correct profit, your 80 products revenue is deducted from the purchase of stock in trade of only 80 raw materials, not the 100 raw materials. So to show that adjustment, we do the adjustment in changes in inventories. So in this case, the changes in inventories will be the negative one, because you bought the raw material of 100 products, but you were able to sell only 80 products. So that will be in a negative. There is one more concept. So for example, in a particular year, you were able to sell 120 products, but the demand was good, the sale was good. It led to you to able to sell 120 products. But the thing was that you were just bought the raw materials for 100 products, and for the 20 balancing, you were able to use that material from last year. So here the changes in inventories will be the positive amount, because you will gonna put that expenses in the expense side to show the correct picture of profit. I hope I was able to help you out to understand the changes in inventory term in a simple manner. Next is the employee cost. It simply means the salary, bonus, pension which you pay to the employees. It comes under the employee cost. Next comes the finance cost. Basically, if in a company you have taken a loan to run the business, so for that loan you have to pay the interest and bank charges to the banker. So that comes in the finance cost list, the interest charges on loans and the bank charges. Next comes the depreciation and amortization part. For example, for building that product, you have bought the building, you have bought the machineries. But for that building and machineries, for example, you have paid 20 lakh for purchasing the land and the machinery. And you will be using this land and machinery for coming 10 years. So it will be very unfair if you just deduct the 20 lakh profit in the first year itself. The profit will look very terrible. So to show in the correct manner, we divide the total amount of the asset which we are buying, for example, building machinery, we divide in the useful life of that asset. So building and machinery, we bought it for 20 lakhs, we will be dividing it with the useful life of 10 years. So that comes to 2 lakhs. So we will be deducting that 2 lakh amount from the profit and loss account, because this is also a cost which is used to make the product. So depreciation and amortization is just the asset divided by the useful life of that asset. So after this comes the other expenses. Other expenses, if you go to the notes to accounts, you can see that we pay the fees to the auditors, repairs and maintenance of any machinery, power charges, fuel charges, and charges for delivering the product to the final customer, which is also known as freight charges, printing charges. All these miscellaneous charges is the part of the other expenses. After other expenses, it gives you the total expenses. So whatever we have discussed from raw materials to other expenses, it gives you the total of other expenses. So revenue minus the total expenses, it gives you the profit before tax. Now comes the tax portion. As per the Income Tax Act, 30% is the tax slab for the companies. So we will calculate the 30% tax, and from PBT, we will deduct the tax. It will give you the PAT, which is profit after tax, which is net profit. This net profit is used by the company. The some portion of the company may distribute it as a dividend, and some portion of it company may save it to use it for the future purpose. So some portion of it goes to the dividend, where they pay the dividend to the shareholders. Some portion is transferred to the balance sheet part in the retained earning, which we had discussed in the first video of the balance sheet. I hope now you are able to understand the balance sheet and the P&L part of any company. So now comes the exercise part. please download the annual report of any company. Try to see my first video on the balance sheet and the second video on the P&L, and start try to understanding what is the balance sheet is saying, what is the P&L is saying, and please put down in the comments so that other people can also learn from your learning. And let me know if you have any question on any balance sheet of any company. I'll be happy to help. If you found this video helpful and want more breakdown on any financial concept, please hit the like button and subscribe to my channel so that if I upload any video, any breakdown on the financial concept, you will be the first one to receive it. Tab tak ke liye, thank you and bye-bye.